Hello, and welcome back to Understanding Your Economic Engine. This is vlog or vlog number 4 on Understanding Your Economic Engine, quoting to ensure a profit. This is the 4th, and it builds on the prior 3. So if you haven't seen the first 3, check them out on our website. My name is Rick Phelps. I am an action coach, business coach, and I am coming to you today to share with you insights and knowledge on how your financial accounting system can get in your way and what to do about it. But today we're going to talk about quoting to ensure a profit. And one of the first things we want to start again is talking about the blinders that are put on by ourselves and our thinking, particularly when it comes to our financials. And these blinders are the filters that basically limit the way you view your world and the way you think about your business. And we're about removing those blinders so that you can have a successful and profitable business. All right. In the prior sessions, we've talked about how cost accounting allocates costs from material costs and labor in cost of goods sold to variable costs and fixed costs allocated to every product you sell, every product you produce. And each product then having some money that goes into the profits bag in terms of net profit and taxes. And what we understand is, since we have months, some businesses or your business can have a month where you don't make any money, there's something wrong with this system. And despite that, we tend to stick with this system, particularly larger corporations, and we go through variance analysis, looking at labor and variable costs and fixed costs and try and rationalize why, despite the profit margin on every product we produce, we didn't make any money. And what we've seen is all this adds needless complexity. And so not only needless complexity, but it puts blinders on us that limits our ability to see what's really going on in our businesses. And so we want to remove those blinders, simplify your world. And we came up with the throughput accounting model based on Eli Goldratt's theory of constraints from the 90s, early 80s, 90s. And this model basically simplifies things down to a single bucket, and that's your operating expenses, and it represents a month of your expenses in this case. And we want to simplify our world, remove the blinders, and see how to make money. Now, we have sales dollars that come into the business. They split into cost of goods sold. That's the TVE, the truly variable expenses that go immediately out of your business. The remaining dollars go into pay expenses. Now, you might have a sequence of processing steps you go through in your business to produce your product or your service. In this case, we have processes A, B, C, D, E, and F. So 6 processes. And you'll notice that process C, the pipe is neck down. That represents your constraint. Every business or every process line typically has only one constraint. This is a great simplification of your world. And the essence of profound insight is simplicity. So we want to know what limits the flow of throughput dollars. Now, in the last session, we looked at a month of expenses, and we decided we wanted to schedule for profit. And so we divided that month into 4 weeks. And each week we had a certain target for throughput dollars that would cover our expenses and build to a net profit target. Right? We're going to expand on that week, because if you can in fact schedule your throughput for a week, you can take it a step further and think about at what rate must throughput dollars be flowing through your process step C, your constraint. All right. So whatever step in your process is the limiting process, you think about it in those terms, all right? And so throughput dollars need to flow through at a certain rate to make sure you are earning the number of dollars you need to pay all your bills and make the net profit goals of your business, right? And so you can ask yourself the question, what rate, what dollars per hour needs to flow through that process to make the profits you want? And so let's put some numbers in here. Suppose your business had a $100,000 break-even point. All right, so that line right there, that's at $100,000, and we wanted 20,000 in net profits. So we wanted a 20% net profit. That'd be a darn good business. That would require $30,000 per week. So after week 1, we should expect to have produced 30,000 throughput dollars. By week 2, 60,000. By week 3, we're closing in on break even at 90,000. Week 4, we bust through 100,000, get up to $120,000, right? So that's our model. If our processing step C had 100 productive hours that we could count on per week, then $30,000 divided by $100 per 100 hours per week gets us 300 throughput dollars per hour are required on average. And so we can look at our business now, not just in terms of buckets of a week size. Now we're talking about how long does each product we're producing or each service we're creating, how long does it take in our constraint process? And assign all of the costs, all of the internal costs of the business to that specific process. This simplifies the world greatly. And so in our case, we would want to have a target of 300 throughput dollars per hour. So if we're quoting, rather than figuring out what typical cost accounting would do, we'd say how much time and expenses and so on are covered in process A, process B, process C, process D, process E, and process F. It's a lot more work rather than just saying, all right, we're just going to look at one process, the limiting process, process C in this case, and determine that on average, we want $300 per hour. We know the low end is $250 per hour, throughput dollars per hour, and that's based on our break even of 100,000. 100,000 divided by 4 weeks is 25,000 per week. Divided by 100 available hours is $250. So at the low end, any product that's going through process C should be generating throughput dollars, which again is a specialized form of gross profit, should be generating those dollars at $250 per hour. And anything between 250 and 300 would be our low profitability products. All right. Anything above $300 per hour, that's our high profitability products. And so this is a whole new take on profitability. And we'll talk about this some more in a future blog, but if you want to really understand the relative profitability of each of your products that you run in your plant, then do this calculation for them. What is the throughput dollars associated with that product, and how much of your constraint time does it take? And that turns your profitability, your profit margin, as it were, into a rate. That is the rate of generation of throughput dollars at the constraint. And that is the one true measure of relative profitability of your products. So here, using this thinking, you can simplify your process down. Instead of having to worry about 6 different processing steps and how much time is being consumed in every one of them, and get into things like activity-based costing and other total wastes of time, tracking all that stuff is just totally not necessary. Your plant distills down to one process, maybe 2 if it's complex, and there's more than one route through the plant. But 1 or 2 processes is a huge difference from dozens or hundreds or even thousands of processes in some major facilities I've been in. So this great simplification gets us down. And if you can schedule your work and quote your work averaging $300 per hour on average, you're going to make 20% net profit. And you know that. You know that on day 1, you know that at the end of week 1, week 2, week 3, week 4. It's never a mystery what your net profit is for your business, because you know it every day, because you quote for it and you schedule for it, and it's just a done deal. It really is that simple. And so remember, your constraint in your plant is always distills down to some aspect of your mindset. And it ain't what you don't know that gets you into trouble. It's what you know for sure that ain't true. So says Mark Twain, so says Rick Phelps. Hope this is helpful to you. If you want to have some help applying this in your business, feel free to give me a call. My number is 216-533-1387. There's my email address, rickphelps@actioncoach.com, and our website is phelpsltd.com. We're always delighted to talk to business owners and business leaders and managers and help them apply this thinking to your business. Have a great and profitable day.